Welcome to the Trading Lounge and the day ahead report, and here we're looking at the US 30 on a 15-minute chart, and just really taking note of the last few sessions here. And what we've got here with this particular pattern this is the rest of it coming down through here. It looks very corrective to me in terms of an A and a B and a C for the A wave, and then an A and a B and a C for the B wave, and then for the C wave to move up through to here. So it is a corrective pattern as it stands. However, it could turn into a larger impulse wave, but yeah, look, I think the best way to handle this is just to wait to see if the 13,500 becomes the support or the resistance. And because we have a little 5-wave structure moving to the downside here as an impulse wave, that means that we'll get a 3-wave counter trend and then another 5 waves down. So we could be looking at this here as being up for wave 1, and then an A and a B and a C for wave 2, and then if support comes on to it after that, then you can expect further upside there. It's the same, this pattern here is the same case with the S&P 500 as well, but it's got a slightly, this is the futures, if you're looking at the cash market, it's more of an impulse wave up in terms of up for wave 1 and back for wave 2, and then a third wave up here. But once again, let's just wait for the same thing as well. As you can see through here, this is where the resistance is, and you just naturally expect the 1450 to hold out as the resistance there. But if just given some time, let's just see if it develops support on that. That will be the clincher. And look, the mirror opposite to all this, and we'll have a look at this in further detail, is the US dollar index, and we'll go into this in the currency section. But as you know, we were looking for a wave 4 to complete to the 38.2 retracement level, wave C of 4 here, and then we're looking for 5 waves down. But as you can see so far, we've really just got this down for wave 1 here, 5 little tiny waves here, and then the A, the B and the C, and then the next leg down. So it can be counted as an A and a B and a C. It may have further to come down here. I haven't really pulled all that apart on this 1 hour chart, but also it could be down for 1, back for 2, down for 3, back for 4, and down for 5. Now, if we get 5 waves in this direction, then the important thing is that we will end up having another 5 waves here. So 5 waves, as 5 waves gave us this little 5 waves here, as that gave us 5 waves, then we can be assured of getting another 5. That's as far as we can go, but that's pretty special within itself. So even in the bigger picture here, the larger fractal, if we get 5 here as such, then we'll get a 3-wave counter trend, like this little 3-wave counter trend here after 5 waves here. So 5 waves here, counter trend here, and then another 5 waves down. So that would give us some further direction of that point there, but we haven't gotten past this first 3 waves here, so that's the bit of a clincher there. It does appear that when we look at, I'll just flip straight to the Australian market here. We'll just look at the bigger picture here, and the reason I wanted to flip to this one anyway is because the Australian market and also the Australian dollar seem to be offering more of an impulse wave to the upside rather than a corrective wave to the upside. But while I've got the bigger picture here, what we've been looking at here, or what we're sort of expecting, well, what I was expecting was, this is the top of a third here, an A wave here, a B wave here, because it's in 3 waves here. I know that you can look at other sectors and you'll get sort of 5 waves coming up through here. It's a bit like looking at if you looked at this with the FTSE, because this market is very much like the FTSE, and on the FTSE 100 it's very much like this pattern here, but on the FTSE 250 it's a much different pattern, and you'll see this as being a 5-wave structure to the upside, very clear. So not too sure which way to go with this actually, but so look, anyway, I was looking for an A and a B and a C wave down to here, and that's just not coming down through here. There is a lot of resistance at the 4-4 here, but this also doesn't count down here in a 5-wave structure as what we were looking for yesterday, and because that market's moved up through here, it's giving overlapping wave structures there. So if I just drill into that a little bit further, so this is the pattern here on the sort of 4-hour chart here, simply because we can have a look at this here. If we look at this situation here, because because this move up through here has taken out the top of this structure here, then it's giving us overlapping wave structures. So it does make this a corrective wave to the downside now, but it doesn't count well as a C wave the way that I had it. But I'm a little bit unsure of how to count that, unless we're going to get a larger 5 in terms of from this point here down for 1 here, because I can count 5 waves in here. So this is more like an A, a B and a C wave here, and then 5 little waves to the upside here. Now this 5 little waves to the upside here, if I just got a smaller picture of that, yeah, so this is it here. So we've got 5 little waves here, the 1, the 2, the 3, the 4 and the 5. So that's an impulse wave. So really that we should see a correction after that. It may push up here to the 44 or even higher, whatever, but once this little 5th wave is completed, we should see an A and a B and a C wave in 3 waves, and then a push higher from that point. So yeah, just be mindful of that. It was a little bit sort of foolish of me, really, because I didn't really understand wasn't quite confident, put it that way, in the wave structure that were unfolding. The best that I could see is having a C wave that would unfold down to here further before we've seen any upside. So this certainly can be the wave 4 finished this point here. But what I didn't take in note, and I should have mentioned, was the weekly bullish cycle, because it really played out on the Thursday and looks like it's going to play out on the Fridays. Thursday is the bear day part, and then the Friday being stronger. So and if the closing is strong today, then we can see that sort of carry through for the Monday as well. But we would need to see the S&P 500 on 1450 and the Dow Jones on 13,500, both on good supports, and we want to see the US dollar index with those 5 waves down. So we're looking at sort of 5 waves here, which is a positive sign. That's basically what I'm pointing out, which we haven't really got from the other markets. But the Nasdaq and the S&P 500 on their indexes, not so much their futures and CFD markets, have a better looking 5-wave structure to the upside, well, at least 3 waves to the upside that would have the bias of turning into 5 waves because of the strong third waves that they have. Okay, well, let's have a look at commodities as well. China's putting some more liquidity into their banking sector, so that's drove the markets yesterday. And also Spain may reach out for some support from the ECB as well, so that's been driving the markets to the upside. But let's have a look at commodities. Okay, just starting with oil first. The prices popped back up over the 90 in following stock, so we can call this low in now. Here's wave 5 at wave A here, and we would just need to rearrange this situation here in terms of the A wave, the B wave, and the C wave to here for wave 4, and then wave 5 down through to here. So the B wave should pull back up 61.8% of the length of this move down through here. So we know that there's supply at, or resistance at 93. So we should see sort of a little 5-wave structure to here, and then a corrective pattern through to here somewhere, and then eventually another push up through here if stock is going to push higher as well. So we need to get an idea on that. When we have a look at, say, Brent crude, just to get another sort of view on things here, and this is an 8-hour chart here, then we've been looking at this move down through here, the sharp move down, the same as the WTI, as wave A, and looking for it to come back in wave B here. And this is sort of a bit of a leading pattern, really. It seems to be in front of the other market. So, but an A, a little ABC here for the B wave, and the C wave coming back up through to here. Now, if that's incorrect, then I would need to go back to a particular pattern over here where we've got this whole correction here, basically an A, B, C for the A wave here, then an A and a B and a C for the B wave here, and this is a C wave here. Now, the only way that would be the case is if this one really took off strongly through here and pierced up through here. So then we would be looking at up for 1, back for 2, up for 3, back for 4, and up for 5, making new highs here with stock as well. So it's just a good idea to keep that in mind through here, because this would be the same case here as well. We don't think that's the case as such, but let's see how we go. But in terms of trading, this is where the levels come in, is that, you know, if the market is, if you were short here and the market got back up onto 90 here as support, then you'd have to exit and be long from that point. And that's what strengthens the Elliott wave in terms of trading, because it's very difficult to consistently make money out of Elliott. It's good for getting the directions, and the price, the levels, are good for the trade setup. So being on the right side of the closest largest number, I know I repeat that all the time, but it is really important, because we can get sort of locked into our own thinking, which is a little bit dangerous at times. Okay, so for the copper market, everything's pretty much going according to plan, very much like the gold market, the precious metals, the whole metals market, so to speak. And we're looking for wave 4 to come into play, and as you know, we were looking at 367 as the 38.2 retracement level, and that's coming pretty close to that, and now we're starting to see a push up here. So everything's going according to plan here. We also need to note as well that wave 4s such here can get rather complicated, so we need to sort of be aware of that. So this move down here could just be the A wave, a B wave and a C wave back here further before we see any further upside there. So we just need to be careful there. But the idea of understanding the wave 4 here and the 38.2 retracement level, it would give support for you know, stock, BHP for instance, and the other markets there. It would help support those markets, knowing where this particular retracement level is here, because the stocks like BHP and Rio seem to at times extend out and then, you know, retract. So yeah. So looking at the gold market, pretty much the same thing as well. With the gold market, the wave 4 that we were looking at is coming to play in terms of the A wave, the B wave and the C wave here. So we got that right. And then looking for support on 7. The midpoint here would be the key to go long, as I mentioned, and yeah, so that's all going quite nicely to the upside. In terms of looking to the upside here, we'd be looking in 5 waves. So we'd be looking for so this would be the 1, the 2, somewhere the 3rd will be here, the 4th will be here, and the 5th will be here, something like that. And then we'll see sort of an A, B, C across here as such at the 1800 here, which would be an old high as well there, but definitely expect some profit taking to come into play there. And that would be pretty much the same for silver as well, with silver's 4th wave here and making new highs above the 35 there. Alrighty, let's have a look at currencies. Okay, starting with the US dollar here. Look, it's all going quite nicely actually in terms of retesting the 80 here, which was also the 38.2 retracement level, and then we'll be looking for new lows to be made through here. But what we do need to see, as mentioned before, we need to see a 5-wave structure heading south here. Okay, so just drilling into that, that's what we've got so far. So we've got the down for 1 and back for 2, and the 3rd wave starting to take shape in terms of personality, and that means essentially the speed of it coming down. Because if it was a C wave coming down as an A, B and C, the C wave would be on more of an angle. You see how that A wave's on an angle here? This one's sharper here, so we can sort of swing the bias to a 3rd wave moving down, but we just got to be careful with 4th waves. You know, they can just get a bit tricky in terms of we could have, you know, a move down through to here like this, and then we could end up with another 5 waves moving up through here again as another larger ABC, so an A wave here, a B wave here, and a C wave there, and then down. They're just tricky. So we just got to be very careful with them and try and pick up leads where we can from other markets as such. But this is the structure that we're sort of looking forward to the downside in terms of the 1, the 2 to here actually, then the 3, the 4, and the 5 coming down through here. So yeah, we just need to allow that to play out. Once we've got that there, then we know where we are at that stage. But after this would get a bounce here off the 79 and a bounce back up and then down again through there. So yeah, the the mirror image of this, of course, is the euro here, with its wave 4 being completed into the close to, just say, the 128 here for the time being, but the 38.2 retracement level thereabouts, and the move up through there. So it's only in its early stages, but once again, we also need to point out that this move down through here could be just the wave 4, but it does look a bit simplistic to me. It's what it has done is created the range. So even if we got some sort of triangle pattern, an A, B, C, D, and E across here as a wave 4, the good news is that it would stay above this previous low here. So that's what we can sort of look forward to. So it's created the range, and originally we were understanding that we had an overshoot pattern here, and we can take the equal distance above to the equal distance below with a pinch of salt, and then once that's sort of played out, then we can sort of work it from there. So we do have the range now, which is nice, so we can work with that. So just sort of drilling in there a little bit. It's a bit of a wonky old sort of wave 4 in this particular case, but pretty much the same as the US dollar index, except that I would have the A wave over here for that. But either way that you count it, it's still okay. But we do need to see the market push up from this 128 low here. So finding support on the 129 is the next step in here, and essentially this is a retest of the 130 as such. There, the structure that we're looking for up here is from this low here is looking quite good, because we can count this as the 1, the 2, the 3, the 4, and the 5 to here. So we can look for a pullback into the 129 area, and then another move to the upside there. It's still okay for this to pull back 61.8% as well. Wrong one. So we could expect it to come back, into this 50-60 area here. So we could say in the bigger picture, if the 128.72 here became the resistance, then we would be looking to the downside. There would be something wrong at that point. So, but otherwise, we'll expect some sort of retracement back into support area here, and then to the upside. The upside here, we've got 129. It's nice if it does come below the 129 actually, because then when it does go back up there and find support on it, it's a better landing pad to take off from. So otherwise, if it does push up, then the top of group 1, 10, 20, and 30. So you want support on top of the 30 there for that, and then looking for support onto the 50 and so forth. So the Australian dollar, it's also in tune with all the other markets, of course, and in its own little way. And this is the count for the downside here, the 61.8 retracement level of the previous trend up through here, from this low up to here has held well, and not only that, it's also displaying quite a nice sort of impulse wave up through here, very much like the ASX 200 as well, and on good volume for the ASX 200 as well. Obviously, it's got a better shape pattern than the US markets, because it was running on the China news from more liquidity into their banking system. So yeah, look, just drilling into this, if we got 5 waves here, then that may or may not be finished. We'll have a look at that in a moment. But 5 waves up here would bring a 3-wave counter trend. So and the 104 would be the support for that. So it's quite natural to allow it to come back into the 104 here before we see any upside. But the good news is that if we do have 5 waves here, then we will get a correction once it's finished, and then we'll get another 5 up. So that's good news. So just looking at that a little bit closer here, it does appear that this is wave 1, wave 2, then the wave 3 to this point here with 5 little waves in it, the 1, 2, 3, 4, 5, the wave 4 coming back, and then wave 5 moving up through here. So wave 5 here would be up for 1 and back for 2. So this would be the 3rd wave here. So the 4th wave will come back in, and we should get a 5th wave up to here. So it's not quite complete just yet. So we should see that sort of come up into up into here somewhere, and then we see the ABC correction coming back. It can come back 61.8%, but this is the whole support area in through here, so it can come back into here somewhere. It may just come back more shallow than that. You'll just have to, but you do want to see some sort of correction. The correction that it will take will either be a pattern like this one here, or like this one here as well. So just have a look at how it's been correcting, what its sort of DNA or fingerprint is, so to speak, and that should continue, but just in a larger picture, larger pattern, so to speak. But anyway, good news there, that's developing quite nicely. So we should see the price above the 105 there, which is something that we've been sort of looking forward to. And we'll just see how this goes with the other markets as well. But the Australian dollar can lead and has led the S&P 500 and the other markets, and we've used that quite successfully. So we could also use it again as well. So a very clear 5 waves here, and a corrective move in 3 waves, either from the 105 here back to the midpoint here, which is probably more likely as such. So something in here, if this extends for some reason or whatever, it would be more likely to be something like this here, coming back into the midpoint here and then moving up through that way like that. So, but yeah, look, very, very positive. So good news there. A strong closing today on a Friday with a weekly bullish cycle. A strong closing on strong volume will create the momentum for the Monday being bullish as well. And as long as nothing happens in the US markets on that Friday night, and if that's the case, then you should put a hedge in place in the US markets to look after any positions that you've got on the long side here. Alrighty, well, good morning and good luck.